Hey, what's going on, everyone? You guys having fun this week? This is great. This is an amazing week. Man, it's been fun. It's been fun. So, if you guys have signed up for the newsletter, actually, we'll just start this off right now. Hey, if you're new to the channel, my name is Tom Gerchek, founder of theconsultant.trade, where we help traders maintain consistency for to go along with profitable futures. Man, I just butchered that line. So, if that is something that you're interested in learning more about, head on over to theconsultant.trade. And I guess we'll just start the video off talking about this. So the consult.trade, I don't show this very much on the videos, but I'm going to start doing it now because we are getting close to the launch of the premium side of this, which is going to be absolutely amazing. I promised you guys I was going to talk about it. I'm going to talk about it now. But first, I'm going to talk about the website. I'm already signed in here, but up here at the top, it's going to be a sign in or sign up. I forget what it says, but you guys know what to do. You'll have two options. You'll have a free membership, and then there's a premium side. For the moment, click sign up for the free side. The whole reason is because I have not launched the premium side yet. The premium side I plan on launching, I think it's April 2nd. Yeah, April 2nd. It's a Sunday. Not doing it on April 1st. I'm going to deal with all of the I got you, that April Fool's stuff, whatever. But April 2nd, I'm going to launch it on Sunday. I'm going to open this up. This right here is not going to be here. The premium page is going to be here, but it's going to have more information about what is included in premium. Premium is basically going to come down to two things, and it's going to be a Discord channel for premium members only. However, with that, it's not just a Discord channel, it's a group. So basically what you're going to end up getting into is I'm going to place you into small groups, groups of 5, where you guys will have a framework to work off of in order to hold each other accountable for your trading plans. This isn't going to be small groups where people sell or trading ideas or signals or anything like that. That is not what this is. I don't condone that. I don't like it. Taking somebody else's trading signals is gambling, and to me, if you really want to take trading seriously, you're not going to gamble. If you want to gamble, go to Vegas, go to whatever it is, New Orleans, whatever, and trade there. Go to a casino and trade and gamble. So the groups are going to be based around accountability and an accountability framework that I've put together. I've spent a tremendous amount of time. I've spent months and months building this, honing it together, and I think it looks absolutely amazing. You guys are going to absolutely love it. It's going to improve your trading. You guys are going to hold each other accountable, because guess what? We can't hold each other accountable, and trading is a very, very lonely is a lonely trading. It's a lonely profession. I mean, look, I've been. This is my office. Well, I mean, you guys get to see the corner, but I mean, my office. I've got a big office, but yet, I've been in this office for 7 years by myself. Okay, it gets lonely. So lonely. I'm talking to a camera. I'm joking. I know you guys are out there, but anyway, yeah. The only true way to really succeed in trading is to be held accountable, is to surround yourself by other traders. That's really what this is about. It's bringing traders together so that they can work together, hold each other accountable, and actually get work done, and stay within their trading plan. So it's going to be amazing. I encourage you guys to head on over to the website and sign up for the free membership. If you want to sign up for the premium, go right ahead. Be an early supporter. That'd be great. But April 2nd is going to be the launch date. I'm going to be updating this page. This today, Thursday. I don't even know what today is. It's Thursday, probably Friday or this weekend. Getting that out and getting that out there for you guys get that out there ready for you guys for April 2nd. So you guys have been told it's going to be amazing. So other than that, on the website, yeah, we've got I've got 2 newsletters. I've got a newsletter that goes out on Mondays. It's called the Beginning of the Week newsletters, where we just kind of talk about kind of the upcoming events, and what we'll get into one of these here in a minute. End of week newsletter is kind of like the wrap up of hey, this is kind of what's happened over the week. Here's some articles you may have missed, some news, and we kind of wrap the week up with exactly that. So the Beginning of the Week newsletter is it's a little bit drier. This Monday was a little bit drier, but it was mainly because I've been putting so much time into the premium, the framework for you guys, because I really want that to be good. I want it for myself, to be honest. I want it for myself as well. So I'm gonna meet new traders. I'm gonna be with you guys. So the newsletters. Normally there's a lot more here. You can go back and look at the other newsletters. You can see that there's a lot more. But we go over the technical analysis starting. I think I put this together normally Sunday night or early Monday morning. Key levels. I've been just kind of going through the basic top 4, top 5, which is Bitcoin, Ethereum, Polygon, and Solana. Yeah. So right now, this week it's just been those 4. I may add in another, depending on where where the market's going, what the news is churning around, and then basically the economic outlook. So this is this week. So and this will be included on the end of week as well. It'll just have the results here, kind of giving you guys kind of a look back. Well, this is what happened. This one is, the Fed interest rate. I think everyone's kind of been waiting for that. However, I think everyone also knows exactly what was going on with that. So, and then some news. Again, there's normally a bunch more articles in here that I do read. I try and read about 2 to 3 articles a day. It's just been a little hard with really trying to focus on the premium side of this for you guys. So this is what you get for the free. Is really all of the newsletters, and anytime I post anything to the website, I can normally just push it out, and you'll get an email for it. So that's what you guys get. You start getting some updates on the premium if you go there and you sign up. So outside of that, let's get into some technical analysis. This is gonna be pretty quick. Actually, you may notice something different. I am still using TradingView, but I'm also using. I recently just signed up for Trading Light. Okay, so Trading Light is another charting software. Although I think Trading Light is more geared towards crypto, whereas TradingView is really more of a broader charting platform. So you get futures, you can look up GDP, you can look up individual, like the US dollar, which is DXY, futures, stock, Forex, stuff like that. That's what Trading Light is, but it's more geared towards crypto at the moment. They do have I normally call them wish list. They are on somewhere on the website. You can go through and request to have stuff added. So there's some market features in there that people are wanting. Me personally, I would like to see some data feeds from DYDX, which is a decentralized trading platform on Ethereum. I would like to see that, but I also like to see Gate.io, because I still also use Gate.io as well. So Trading Light. Trading Light. It's over here. Trading Light. Damn camera. I'm getting a new camera too, by the way. So you guys be able to see me in like full HD. I think that is HD. I think it's like 1080. Yeah, it is 1080p HD, whatever. But this thing's like this camera's like 10 years old. Do you guys know that? It's like a Logitech C670 or something, or 730 or whatever. I don't know. It's outdated. Anyway, sorry. Technical analysis. here is, so right now we're looking at, let me switch this. Boom. Okay, this is a different screen. Ooh, look at that. Okay, so Ethereum's moving. I wonder what for. Yeah, we'll get to that in a minute. So let's move to the 4 hour. So you know, if you guys are curious on the Trading Light platform, what you see over here is time of sales, and over here is the order book. That's just kind of how I have it set up. You can move these around however you want, whatever fits your liking. As far as the indicators, these are just it says funding rates and order book volume. And I've also got some liquidation bubbles here as well. So I'm going to move some of this. And actually what's really cool, and I was watching this right before I hit play, was, here, let me switch this. So I normally switch this to minimum of 5 ETH, and I'm going to say about 5,000 as my peak. So this is a really cool feature of this. Is, I mean, it gives you kind of a history trail of the order book volume at different levels. So if this is something that, it's been a while since I've used a heat map, and actually, to be honest, I really didn't even use it. But you can see, so let's stick to the 4 hour, I guess. But you can kind of come in here and you can kind of see, okay, well, on this particular bar at the moment, you have, you know, 5,900 orders sitting at 1745. All right, see, right there at the middle. And you know, once the candle closes, that 5,900, if you know, I'm sure it'll change, will actually become a historical value. So you can see where orders were previously, which is a really nice feature overall. So I really like it. And you can basically, the brighter colors here are going to be higher orders. So I mean, you can see that right there. You know, so we're sitting on the white, which is, you know, it currently has 12,000, 14,000. And as long as you're on the current candle, those numbers are going to fluctuate. Orders can be taken off, put on, taken off, put on. But yeah, I tend to like it quite a bit. I think it's a really good tool. Probably not something to really trade off of, but I would probably use it more for confirmation. So I don't typically have it on my screen all the time. So all right, I'm going to close the order book so we have a little bit more screen here. Real estate. Let's see what's going on in the world of Ethereum. So we've pushed higher high since February, actually since the beginning of the year. Let's see. Let's start doing some markup here. Let's see, get this right there. So currently, this right here is going to be our resistance at 1846. Looks like we're pushing up right there. I don't know what that news is, because it started as I started pressing record. We can take a look at that here in a minute, see if we can find out. And then our next resistance is going to be about 2030. I think that was kind of already guessed. You know, looking back here previously, honestly, I think if we can break that 2030, I mean, I think, geez, we'll have pretty easy time, in my opinion. There's not a whole lot stopping us here. I think 2300 probably might be the next best bet. I mean, we can go ahead and attack that one out now. This one right. Come on. Get on there. Get on there. There we go. Yeah. So about 2293, 2300. Yeah, it's probably pretty good. So yeah, I mean, you can also see here liquidation bubbles. There's a liquidation here in this channel that caused a dip. However, okay, no, that wouldn't have been FTX. So, all right. So that's kind of my view on Ethereum. I mean, we've got a couple levels of support, some key levels here we can take a look at. We're going to change this to green. We got some key levels here. These are going to be the pullbacks, most recent lows. So I think worst comes to worst, you know, especially with this run here. What kind of has me a little concerned are these upper wicks. I mean, how far away they are from the body. That is a little concerning, especially with this monster candle here. I mean, you can see back here we have a candle roughly about that same size, and then you just kind of have people taking profits. I don't want to really call it a sell-off. It could be a sell-off, but I guess you can call it a sell-off. But I call it, you know, taking profits. Why would you not take profits in this run-up? But nonetheless, it pulled back quite a bit. Let's see if we can get a percentage on that. Yeah, we can. So, I mean, it ended up pulling back, you know, about 9% before finding support and going back up. So, yeah, again, my only concern it would be these, you know, these long upper wicks in this area. And you know, they're just so far away from the opening body that, you know, I have a feeling that we would actually end up pulling back. But I think this right now could probably will probably come to fruition, you know, probably here within the next hour or so. So keep an eye on that. This move will probably already be done, more than likely already be done by the time you guys are seeing this video. So other than that, yeah, I think if we break up, you know, 2030 is probably not probably, but it is. I mean, we got a long history. I mean, we haven't been up at that level since August of last year. So I think that'll be a really easy move to 2K. So, but yeah, look at that. I mean, we've been consolidating between, you know, about $500 for the better half of, you know, the fourth quarter, all the way through the first quarter. You know, the end of the first quarters, you know, in probably what, like 2.5, 3 weeks, April 16th. So yeah, we've been in consolidation for quite a long time. We're overdue for a pop, a very, very good pop to the upside. So the good thing is that I'm currently in the money with with Ethereum, so that was good. Let's move on to Bitcoin, and then we'll kind of stop there. So I think this video is already getting pretty long. Yeah, so yeah, again, you know, Bitcoin's going to be in about the same, yeah, since it's been in pretty much consolidation mode since June. But the end of the first week of June, we haven't been at this level since then, June of last year. So long time of consolidation, you know, between, you know, being down around, you know, 15,000, 15,500, all the way up to, you know, where we are currently, close to sitting underneath 30. You know, I think I did see an article earlier last week. I think I tweeted about it, where, yeah, there were at least 2 institutions that were saying they, you know, now is the time to buy Bitcoin. I've been saying this for, you know, since, well, I think December. Since December, we were going to get around 30K. You were going to hear that go ahead. Now is the time to buy Bitcoin, and you know, there was a good chance we were going to shoot to, you know, 35, and you're going to see a lot of those institutions that were buying and consolidating in this area. They're going to start taking profits around the 35 to 38 area, and it's going to pull it back. Quite a bit. So, you know, to make up for their losses from last year. You know, but then again, you know, we've got the happenings of SVB, the other bank, you know, the central banks, and you know, that's really what this big climb is all about. You know, it's really showing crypto's true strength, and this is exactly what it was for. Right, you know, this is exactly what crypto and Bitcoin was meant to do. Is what, you know, meant to be, you know, an alternative to the U.S. dollar, which, you know, frankly sucks, or just fiat in general. So let's see. Let's get into marking up some charts here. Come on, get on there. All right. I want that to be red. Is that pink or is that red? No, it's orange. Alright, whatever. Let's see. There. So we have, looks like 32,427. However, I think, I mean, just basically, looking back here from, what is that, May to June, looks like we have our own little consolidation back there, which may act as a kind of a resistance zone as well. So between 30 or this 29 to 32 may be another consolidation zone for us for a bit before pulling back. Where are we? I think this right here would probably be a good support level as well, since we're already above it. Let's go look at that. Again, guys, this is on the 4-hour chart. So yeah, look, that lines up really good. There's gonna be another one right here, down here at 19.5. So yeah, I mean we've got some. I mean we've got definitely still have some buying time. I mean especially if. I mean, guys, there's always good times to buy. If you're gonna make buying decisions, go to a higher time frame, and put your orders just to find support zones. They don't even have to be my support zones. Just find those areas and place a buy order, slightly above the support, and then again slightly above the support. Or even if that we're in a downtrend, you can always, go to, I think Coinbase and Binance allow you to set up routine. You could, you could buy crypto every single day if you wanted. I think I did that for a while. I think I did that. I think pretty much all through the fourth quarter is I set up buying Phantom. I just continued to buy Phantom over and over and over. I think I was buying. I think I had an order every Thursday. So yeah, I mean, if that's kind of what you want to do, you want to get into it, and the best way to dollar cost average, it's probably the best way for you, to be honest. So right now, I mean, yeah, I think currently Bitcoin is in a really good spot. I think Ethereum is in a really good spot to push higher. I don't know exactly what this big push is, but actually we can go over and take a look at it. Here, I'm going to switch back over here. Let's go to our economic calendar. So we've got we've got a couple of things here. My finger cut my finger yesterday, and so it really hurts. Well, I mean, it doesn't hurt. It's just it's just really it's not looks uglier than it really is. So sorry, I'm just get this here real fast. Should have done this earlier. Where'd my sticky note go? Alright. Let's see. Wednesday is... What is today? Today is no longer Wednesday. It is... What is today? Thursday. It is Thursday. It's Thursday. Let's see. So we've got... Gonna go through this real fast. So Monday, there really wasn't anything worth kind of reporting on Monday. Again, you guys can follow this in the newsletter as well. And yeah, it's not. Monday was not very eventful. There was really nothing here. Tuesday, Canadian dollar had some CPI. Inflation rate stuff. Most of this was worse than expected. So if you're trading Forex, you probably saw some stuff with the CAD pairs. Tuesday, U.S. dollar also had existing home sales. Those were up. Those were better than expected. Probably could have guessed that. Yeah, almost was 9.5%. So the consensus was 5, and the actual was 14.5. Wow, nice. What else do we got? Let's just, I think that's week over week for the crude oil, so it was worse than expected. GBP, so inflation rate, British pound had inflation rate yesterday, Wednesday. That was better than expected, it was 0.5% better. Yesterday, I think the US also had inflation. No, not inflation. It was the Fed interest rate. So what is, hold on, interest rate. So that was, so wait, no, did they change it? Actual as expected. Let's look at this. So February, no, they increased it. Oh, okay. So yeah, sorry, I misread that. Okay, I misread that. So yeah, inflation rate. So the consensus was that what was expected was that they were going to increase it 0.25 basis points or 25 basis points. 25 basis points, which is 0.25%, which is kind of what we see here. So in February, what was the jump in February? So yeah, it was another 0.25%. So yeah, February was 4.75, and the actual was, the consensus and actually that was reported yesterday for March was 5. So they did an increase 0.25% in inflation or interest rate. So if you don't really kind of understand how that affects the market, think of it this way. The next time you go to your bank, when you actually walk into the bank, I know mine actually has a on a board. It's like a little billboard on the side, and it kind of has bond rates, interest rates for CDs and stuff. And so they have like the 1 year, 2 year, 3 year, and 5 year, and so on. Basically, what ends up happening is, the next time I go to the bank here in a few weeks, I'll probably look over at it and it'll probably say 5%, because I think the last time I walked in it was 4.5%. Just think of people taking, however much money they have. Minimum is $1,000. So if you have $1,000, you take that out and you put it into a bond. In 1 year, it's gonna appreciate $45. So I mean, that's a guaranteed $45. Now, some people are going to argue minus inflation, but regardless, it's a guaranteed $45 as long as you don't touch it and you let it mature. For people to think, where's my money? Where's my money better off spent? Is it better off being put into the S&P, or is it can I just take that money out and put it into a bond where it's going to be guaranteed? You have some people that can actually put in the FDIC limit of 250,000, whatever they're actually going to. I think there's talks about increasing it to $2 million. I think that's going to be. I don't know if that's a good idea, but because I could essentially see people imagine if you just take $1 million and you put that into a bond, a 1 year bond that's set at 4.5%. I mean, essentially, what is that? 1 million. Flip the zeros over there. Was that 50K? Is that 50,000 a year? Or is that 5,000 a year? I don't know. You guys do the math. But anyway, I mean, essentially, you could take that. I mean, what would you rather do? Would you rather just have a guaranteed amount, a fixed amount every single year, which is pretty much what that's guaranteeing, minus inflation, or you could just stick $1 million into the S&P and hope that you get more than what that interest rate is. That's kind of where that trade-off, that risk averse type of thinking is. So that's kind of why when you see an increase in interest rate, people are taking money out of the market and they're putting it into something that's a little bit more less risk. So something that's actually going to pay them more percentage year over year rather than in stocks and bonds and stuff. So that's kind of what that is. Thursday, what is today? So today, probably what that was jobs. It was probably jobs claims. Jobless claims. Let's see, jobless claims look worse than expected. Well, that's continuing loss. No, initial jobless claims, and that's not a preliminary report, I don't think. So it looks better than expected. So they were expecting 197,000, and it was actually about 6,000 less. So let's see, new home sales. Home sales are down. But I mean, as far as home sales, I mean, you're probably going to be expecting that as interest rates rise, people aren't going to be able to afford a house at 8 and 9% interest rate. That's insane. That's kind of how I think I was reading an article the other day. That's exactly how people in Europe, I think, England or Germany, where they have this floating rate. I think it's a different floating rate than what we have in the U.S. The 5/1 ARM, where it can only go up a certain percentage every single year, but it can continue to go up every single year. Where these people were pretty much paying no interest, and then all of a sudden they're paying like this extreme high. They can barely pay for their home. That's kind of what you were seeing in Europe. I don't remember where. I think it was either Germany or somewhere in Europe, England or the UK. It might even just been the UK. So other than that, yeah, I think that's just this here. So let's see, what do we got for Friday? So GBP has retail sales. Let's see, PMI. Yeah, CAD. So yeah, looks like Friday is going to be based around retail sales and PMI. So, and I think at least for the U.S. ones tomorrow reporting about 15 minutes after the market open. Those look like those are going to be preliminary reports. So you'll probably see a preliminary release, and then you'll see an actual adjusted release later on. So, probably be careful trading tomorrow. There seems to be some high impact news all around Euro session and Canadian as well. So if you're trading those, but yeah. All right, man, this is a longer video. I think this is one of my longest videos, but hey, I got through a lot of stuff. If you've made it this far, thank you for sticking around. But yeah, this has been fun. I don't normally do it this way. Trying this new style. But anyway, again, if you guys want, head on over to the consultant.trade, check it out, sign up for the free membership so you at least get the newsletters twice a week, Friday and Monday, or Monday and Friday, however you want to look at it. And yeah, other than that, stay on the lookout for the newsletter for my accountability group that's going to be going live. I promise you, April 2nd. So other than that, guys, that's all I got for you today. Check out the links in the description below. There's some tools on there. You can go to the website and find those same tools. But I think all of the discounts are in the description for the moment. I need to get those up and over to the website and my tools section. It's been busy. So other than that, guys, stay safe, stay healthy, stay decentralized. I will see you guys in the next one. Later.